Hey, welcome in and happy April Fool's Day. So, this live stream is not going to be an April Fool's joke. We're going to talk about the Strait of Hormuz, but in a different lens. Everybody's focused on what the impact is today. We're going to take a look at history, where we are, and where we're going into the future. This is something that we often try and do is take a look at where we've been, where we are, and where we're going into the future. So we're going to take a lot of things that you may have heard already about the Strait of Hormuz, but we're going to take a different lens. So the day that oil stood still. So for decades, we were told that the old age was ending because of renewables. Well, guess what? We've continued to grow demand on the oil side as economies are growing and shifting, and the direction of where that oil is going, you can think about it in terms of a stair step. Somebody to heat their home may use fireplaces. Well, that actually has a carbon impact because there's smoke that goes up in the air. Then you go into oil generated electricity and power, and then natural gas. So it kind of escalates up through different fossil fuel stacks. That does have an environmental impact, but as economies grow, the reliance on energy becomes higher and higher. So what has happened is I'm gonna pivot from this, and I am gonna show you this. Okay, so a lot of people have probably already educated you, and hopefully we have at this channel, about the Strait of Hormuz, which is in between the United Arab Emirates and Iran. So this is where roughly 20 million barrels a day flows. And I'm going to tell you the relative importance of that. But this is where, prior to the Iran-US conflict, there was 20 million barrels a day flowing through that strait. So let's walk through this and talk about the fact that last year we were talking about energy transition, global consumption dropping. This year, we're going to talk about how the map is redrawn and where it might lead us to. So there's a lot of question marks on where it's going to lead to, but we're going to ask all the questions. So feel free to ask your own question, drop a comment, and we'll be sure to get back to you. So now, how important is this? So the OPEC producing countries that border all these locations, such as Saudi Arabia, Iraq, Qatar, Iran, United Arab Emirates, Kuwait, all of these border this the Persian Gulf and send oil. Um, Iran sends it from Karg Island, and then you have Kuwait, and then you have I forget the port city, but then you have Saudi Arabia here, Qatar, and then you have United Arab Emirates out of Dubai. But they United Arab Emirates also has Fujairah on the other side of the strait. So this is where we look at 26 million barrels a day is produced by those respective countries. That doesn't mean all 26 flows through the strait. Actually, it doesn't, but some of it flows different directions. We're going to take a look at some of the rerouting, some of the things that have happened over time. Most of this does flow through the strait, though. So now, let's not forget, there's also liquids production. This is something that's not qualified as oil, but still is oily. It's not in a gas state. It still travels like a liquid. You can think about it as kind of a lighter oil. So it has less energy density and content, but that puts us over 30 million barrels a day of production of oil and oil related products. Those are still products that are run through refineries. So when we're talking about the Middle East, this is 30 million barrels a day out of 104 million barrels a day of global production. So this is how important the Middle East is. So the Middle East produces over 30 million barrels a day of global oil production. And of course, we are including the liquids, the oil liquids alongside that. You can also look North America with the United States, with Canada is also producing about that same level. So you can see that there is a very large influence of the global oil production by region. Eurasia has been growing. Asia Pacific has been growing. Central and South America, they're still on the list, but they've been growing. And Africa, but Europe has not been growing. So this is where we're looking, and the Middle East is a very big impact. And of course, many people have already been talking about this, and I'm just covering this. So we're looking at 20 million barrels a day that is trapped daily. Is 5 times larger than the 1970s crisis. Now, demand and supply look a lot different than they did in the 1970s, but for scale, this is very, very big. Now, what about this 21 miles? That is essentially the distance from here to here. So this is the constraint point that we're talking about. And I'm going to talk about other constraint points when we talk about rerouting. So bear that in mind, that there's 21 miles of width in the Strait of Hormuz, which means it's also surrounded by some mountains, so it's hard to defend. It's hard to bring in ships through, because a lot of these ships are really just trapped out there. They're running supplies to the ships because the crews are running out of food and water. So this is a really big problem. And add in, I'm not going to cover it today, but add in, this is where 60% plus, depending on how you calculate that, of the region's food comes in via the Strait of Hormuz. Now, this is what we're looking at in terms of all the green ships or cargo ships. All the red ships are oil and product tankers. So this is a very big problem. So the $120 barrel, we spiked up to WTI up to 120, Brent over 130. I can't remember the exact number that we got to, but Brent and crude skyrocketed from 70 in February to over 116, depending on Brent or WTI. JP Morgan analysts are whispering 150, and quite frankly, for the size and scope of this event, we are vastly underpriced, because we are in the same place that we were in March of 2020. We don't understand the supply and demand shock that this is going to have. So why can't we just go find more oil? Well, you can't replace 20 million barrels of oil overnight. Let's go back to this chart right here. There's a lot of oil that is off the market right now that other locations can't just simply scale up. So you can't just create it overnight. There is no spare capacity waiting to fill this to be switched on. And the 2008 peak of $147 a barrel looms, and honestly, I think it will be overtaken the longer that this event goes on. So another myth that we need to talk about is the infrastructure lie. So the biggest myth is, well, we can just reroute it. Oil is transportable, but you can't just necessarily just reroute it that quickly, especially when you're talking oil, which is something that can be transported by truck. But let's take for instance some U.S. trucks. So you have roughly 190 barrels per truck. Okay, so how many trucks is it going to take to actually reroute 1,000,000 barrels? Well, let's go to the calculator. 1,000,000 divided by 190. So we just need 5,200 trucks per day running. So this is a very, very big problem. And we can't just create those trucks overnight if there's not 5,200 trucks going in, because most of this production is flowing into pipelines. Pipelines are being routed, so they don't even have a place to offload the crude. So there's an infrastructure problem in getting it from the field to market. So you can't just reroute it overnight. There will be infrastructure built as a result of this. I guarantee that there will. Now, what type of infrastructure, what type of rerouting, that is going to depend. But Saudi Arabia and UAE do have pipelines over to the Red Sea, but they can only handle about 5 million barrels a day. I've heard that they've been able to reverse engineer and increase that a bit, but that leaves about 15 million barrels a day as a whole. Now, there is probably a lot of temporary storage that is being utilized right now. That capacity is every day getting closer to being filled. And when that gets filled, then they're going to have to shut in production. And one thing about production, when you shut in production and you bring it back online, you may not be able to produce at the same level that you did before. Or you may even damage the reservoir underneath the surface, and then the productivity out of that reservoir is going to be limited over the long term. So this is a very big problem for oil producing fields. So the capacity gap is 5 million barrels out of the 20. That's 75% shortfall. You can't build 1,000 miles of pipe just overnight. It's not going to happen. Major infrastructure is going to take years and billions of dollars. And the fatal assumption is 40 years of global energy infrastructure was built on one premise, that the strait would always be open. And that's not true today. So let's take a look at some of the rerouting. The biggest impact of the region is the east-west pipeline that moves, and I do apologize, I'm probably going to mispronounce, but the Abquk Yanbu NGL pipeline, the east-west crude oil pipeline, and the NGL pipeline. I probably mispronounced that. My apologies. But this goes across Saudi Arabia from the Persian Gulf over to the Red Sea. So this is 8 million barrels a day. That's the word on the street, that there's 8 million barrels a day being shifted from east, from east to west, going into the Red Sea, which is taking the barrels either out the Suez Canal or out through the right by Yemen. We're going to talk about that choke point in just a second. So both of those choke points are definitely important to understand. Well, let's go ahead and talk about those right now. You got the Suez Canal. This is a choke point that Egypt actually built another pipeline, so there is a way to do that, but there is concern that some Houthi rebels and some activity down in Yemen are going to set choke points here and do a similar choke point so that those barrels cannot get out, so that they're truly trapped in the Middle East. So the geopolitical chess match. Iran doesn't need a war. It only needs to it only needs to make the cost of inaction unbearable for the West, and it's working. So Iran's leverage is that they can't win a conventional blue water war versus the US, but it doesn't have to. By closing the strait, they've turned the global economy into a hostage, and they can do this with small ships. This is one. This is from an image. I don't know if this is accurate or not. This is one that I found on the internet, but word is that there's many of these ships that are patrolling to make sure that ships aren't going through there. So every day the U.S. military is spending clearing mines, escorting tankers, and the price of gas in Chicago and Berlin just goes up. So options A, sanctions relief for Iran. Option B, a global Great Depression. It is the ultimate leverage. So the OPEC plus collapse. So this is something that could happen. This is speculative, but this is, we used to think of OPEC plus controlled the market, but look at the situation unfolding. Saudi Arabia, Kuwait, Iraq are watching their primary source of income sit idle on land. This is paralyzed by geography. And they're not short on oil, they're short on ways to move it when the Strait of Hormuz gets shut down. So the blockade has neutralized their market power entirely from an economic sense and a moving oil sense. So this is a permanent power shift, and this is a dynamic that is going to be unfolding and seeing how those relationships change over time. I know that's kind of a dramatic headline. I wouldn't say OPEC plus collapse. It's just going to look different. Now, how? That's what we're going to talk about. Let's talk about the 2026 outcome. The energy landscape is going to be unrecognizable by the end of 2026. The era of cheap, easy, globalized energy is over. So the new normal, in the new normal energy map. If the Strait stays closed, the world will be forced to deglobalize its energy at breakneck speed. We're looking at massive, desperate rush towards domestic nuclear for power. Nations are fast tracking reactor approvals. This probably means uranium markets are going to look a lot different going forward. And I think the answer is up, 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 because most of the nuclear reactors need uranium to run. It's still a finite resource. It's still a resource that needs to be um, captured the traditional way. So it's not truly clean energy because there is still a mining impact. So localized renewables, energy independence over efficiency, and proximity over price. So these are energy independence and affordability are going to become major headlines over the next 12 months. And there's going to be a pipeline boom. I would say infrastructure boom, not just pipeline, because there may be trucks, there may be other modes of moving, but there is going to be expansion of pipelines that are going to get to other places because there has to be another bottleneck. Just as we were looking at this, when we look at the map and you look at a third of the world's energy coming through here, and through here. What you see is a very tight choke point, is all of these barrels can be trapped unless there's thousands of miles built across these regions. And there's also, this would have to go across into Africa. So there's a lot of geography that is going to work against that, but pipelines are going to need to be built as an alternative. The oil for security deal that started in 1945, that era is over. The era of cheap, easy energy died this month. So is the era of global trade over? So this is going to be an interesting question, and we're not going to be able to answer all these because many of these are going to be unfolding as we go. And right now, I'm recording this on March 30th, 2026. I view today at the same way that we viewed March of 2020. We don't fully understand the supply and demand impact of what this is going to mean for markets, for oil, for energy, for the next, I'd say, 5 to 10 years. So we're living through the defining energy event of the 21st century. And the question is, if prices don't come down, it's whether the system can survive long enough to build another way around the blockade. So what do? Track the crisis daily, measure the local impact, and the map, recognize the map as being redrawn as we speak. So this is a pre-war and post-war oil flows. This shows bidirectional flows, but most of the oil out of the Middle East was flowing around to India and down through the Strait of Malacca and then up to Asian countries like Japan, Korea, and Japan, North Korea, South Korea, and China. So those are the primary destinations. There was some, about 10% of those molecules made it out this way, went around the Cape and over to North America. So some of that did actually happen. But this is the oil flows. And think about it this way, that most of these oil flows supported Asian economies, some to European economies, but most of it to Asian economies. So the question is, where do we go from here? Well, right now, all that oil is blocked. It's trapped. It's sitting there. They're rerouting some of it, but not all of it. So what is that going to do? It puts Asia in a very tricky spot. So North America can send some out into the Pacific, but then that's going to come at the detriment of European exports. So there's just simply not enough barrels to actually reverse the flow and actually cover both Asia and Europe. So this problem is going to be a very, very big problem, and I would say that some of the rerouting is taking the barrels across the east-west pipeline into the Mediterranean via the Suez. And again, back to choke points. When we go east-west, you got the Suez, Strait of Hormuz, which is shut in right now, and this strait, which I actually did not know that much about, but the Bab el Mandeb Strait. So we're going to be hearing more about that strait in the coming days, and I do expect some activity. Unfortunately, not very good activity in the Suez Canal and in the strait off of Yemen. So where do we go from here? We're left with a lot of questions about the energy markets, and where do we go from here? I'd say we are in the prologue of this story. Definitely not in an area where we know what's going to happen. And anybody who says they know, I would listen to the theory, but it's going to include a lot of things that we can't fully absorb yet. For instance, a couple of ancillary impacts. We're talking about oil prices, okay? But we are also talking about a humanitarian crisis in the works, in that if 60% of the food of the region is coming in via the Strait of Hormuz, that has to be solved, and quick. That also, there's also some of the bottled water comes in that way because there is limitations on desalination plants. So that's one thing that we need to look at. So when we think about food, also think about 17% of Qatar's LNG exports just got attacked. That is not going to be able to be repaired for 3 to 5 years per some early estimates. Some of that is going to limit urea production, which is actually one of the key components for fertilizer, which means there is going to be food shortages as a result of this globally, because much of that LNG was used for urea, which was used for fertilizer, which is used in growing food. So we're not going to be able to grow as much food. So this crisis is going to get fast, and it is going to be a very difficult one. So that may mean that some Asian food production may shrink over time. And what that means is that food prices are going to go up and food shortages are going to start to go up. So that is one thing. Another thing is that some of the helium, about a third of the world's helium, is actually inside of the sulfur inside the crude oil exports. So this is another aspect that we're not going to see. Helium isn't just for balloons, it's used for MRIs, it's used for space programs, it's also used for military. So that is going to have an impact. And again, we don't understand the full impact yet. Another thing is that I can't remember how, but some of the barrels provides an input into being able to extract copper and aluminum for mining purposes. So this is going to impact metals as well. This is inflationary across the board, and we've only just begun to understand how. So listen, energy markets are moving fast. We cover things every day here at Energy Rogue. Listen, if you follow it, the energy markets, if you trade energy markets, or your company buys or sells energy commodities, we offer several products that can help you. A Rogue Radar, which we provide 2 PDF reports plus a daily report that gives you insight into what is happening into the marketplace every single day, from a technical, from a fundamental, and everything that you want to know, so that you can quantify. If the markets go up, you can understand why. So that is $89 a month, and we'd love to see you inside. If you want to learn a little bit more about how to understand the energy markets in just 5 minutes a day, there is a link down below for a free ebook. And this is what the ebook looks like. And we talk at the clarity revolution, because people often look at the energy markets, but they don't fully understand what that means. That is at the center of what we do at Energy Rogue. Would love to see you inside if you want to join us. Otherwise, sign up for the free ebook. And again, we're just getting started on understanding the impacts here, and the impacts are going to be very large and very big. And this is going to have ripple effects, I'd say, longer than COVID. So I think the ripple effects of this are going to be a longer lasting one. So listen, that's what I have this week. Drop me a comment and let me know what you think. Let me know what you think, what you think the directions are. I just touched on food, metals, LNG, crude oil, products. Well, I didn't even touch on gasoline, diesel. Those are going to look a lot different. There is going to be a North America view, a Europe view, an Asian view. We'll do that in a separate video. So anyway, thanks for spending time with us, and we'll talk soon.